Hello traders, in this video I'm going to show you how to project the next day's bias on the currency pair of your choice. Probably the biggest reason why most Forex traders fail is that they don't have an accurate trading plan. They don't really have any idea about what they're going to do. They just look at the chart, and when they see candles go up, they buy. When they see candles go down, they sell. The movement in the Forex is designed to act that way in order to entice you to take a position at the wrong time so that the pair can be moved against you so that they can take your money. So having a good trading plan is a key to your Forex success. And the simplest way to create a trading plan is to, at the end of the day, like right now, if we're going on the end of today, and what I want to do is I want to determine which way I want to trade the currency pair of my choice during the next session. So the first thing that I do is I look at what is the average daily range of a currency pair. The average daily range is defined as, in this case, the average range between the high of the day and the low of the day over a 14-day time period. The MX Forex software shows us here that the average daily range on the pound yen is 213 pips from the high of the day to the low of the day. Today, the pair moved 289 pips from the high of the day to the low of the day. And over the course of the last 14 days, the average daily range was a total of 213 pips. So the first thing that I do is I take this number, 213 pips, and I go to the 1 hour time frame. And I'll go up here and I'll take this little text here and I'll put in ADR 213 pips. Then I'll change that to only show on a 1 hour and a 15-minute time frame. And there's a reason for that. The next thing that I'll do is I will take and draw a little gray box. And I will make the box 213 pips. Roughly. Doesn't have to be exact, but close enough. And then I'll take and right click on the mouse and I'll change the rectangle properties only show on the 1 hour time frame. And there's a reason for that, and I'll show you here soon. Then I'll zoom out a little bit, and what I will do is I will put a box at the highest point of the chart, and I'll put another box. What you can do is when you've got it highlighted, you put your mouse over it and you hold your control key down, then you click on your mouse, and that allows you to make a copy, and you drag it down. And I'll do that, and what I'm looking for is I'm looking for a story. And because the MM4X software has these price points built into it, it's relatively easy to read the story. And so I will line these boxes up with the basic cycle. So we have 1, 2, 4, 5, 6, 7, 10, 11, 12, 13, 14. Okay, so the last 14 days, The average daily range is 213 pips per day. And so what I can see is that we came down from the high to the low, and now we're just kind of oscillating up and down. So I draw these levels like this. And then you can take and drag these boxes out to match. To match these levels. So you can cover, more time. So what I'm basically doing is I'm kind of mapping the cycle of the last 14 days so I get an idea of what's been going on. You can take with the MM4X software, you can move those lines, get them out of your way. Sometimes you have to do that to be able to grab the box. And so what I see here is a little story. And what you can do is you can go back to the 4-hour time frame and see the boxes don't show up on the 4-hour time frame. They don't show up on the daily, and they don't show up on the weekly. Then what you can do is you start to number these cycles. So what I'll do is I'll select the text that I made, the ADR box. I'll put my mouse over the ADR text, and I'll hold my control button down, and I'll click my mouse, and I'll make a duplicate. Then what I'll do is I'll change this text to, I'll make it say level 1. And then I'll make a copy of that, and I'll change that, and I'll make that level 2. And I'll change that one, and I'll make that one level 3. And then what I'll do is I'll change that, and I'll change that to peak. And then I'll make another one, and I'll change it to reset. These are basically the 6 different codes that you will enter onto these boxes as you kind of decipher what the pair's been doing. So I can see that this is the high, and I can see that this is the low. And so what I'll do is I can see that this is the highest level. I'll start that with a level 3. And I'll take this one, and I'll call this one level 1. And I'll take this one, I'll call this level 2. And then this is level 3. Now I can see that the pair cycled down from level 3 down to level 1, 2, and 3. And then it oscillated for a period of time. And I'll slide that over to like 4 days later, and then we basically had another drop, and so what I can see is that we had another rise to the upside here. So I'll call this level 1 because it's the first move in the opposite direction of the previous move. So The average move of a currency pair, the market makers will only move a pair 3 days in a row before making some kind of correction. And then they'll hold the level and they'll chop it up and down to confuse the traders. I can see clearly that this was a trap here and that they collected some contracts to the low side, and now they rose the pair up and they made it rise up to the 200 daily moving average, and now it's just chopping. So if the pair fails to break this 200-day moving average to the upside and continue on in a cycle level 2 to level 3, then what will happen is the pair is going to cycle up to this, probably around this number again at 180, and it could bounce and cycle back down. So at this point we're in the transition zone, and if the pair decides that it doesn't want to go any higher and that it wants to go lower, then what I'll do is I will change this to what I call a reset. And then I can, if the pair closes down lower again tomorrow and continues down, then I can expect another 3 days of drop. That kind of happened here. The pair didn't really get all the way up to the 200-day moving average, but it did cycle up and it held the level for a period of time, and then it dropped again. So realistically, this could have been considered a reset here also. We only had 2 levels of drop, but the pair hit the brakes and it started to cycle back up, and it did cycle up 250 pips, and then from this line to here is 125. So it cycled up 375 pips. So right now there's some indecision as to what the currency pair wants to do. But if I look at the daily chart, I can see that there has been quite a long rise over the course, and you can with the MM4X software you can remove these lines so they don't show up on all the time frames. What I can see from this point here is that, you know, there is a fairly good trend going up. So I'll analyze the larger time frames also to get my direction. And I'll draw a trend line on there. And now, of course, I'll make this available only on the larger time frames because I don't really want to see it on the smaller time frames. And, you know, if you look at the monthly chart on this pair, there's no doubt that the trend is up on it, and there is a trend channel here. So even on the monthly, when I analyze this pair, I can see that the trend is up, the pair is at the bottom of the trend line, and that the pair has a very good potential of continuing up. So that goes along with my theory that I'm looking for buy opportunity on this pair tonight, and that the pair will cycle down around this 177.50 area and bounce and cycle back up in the direction of the trend.